Two very, very impressive houses together. Two big old properties with loads of character.
Yeah.
So it kind of ticks all boxes, really.
From memory, that sort of whole period was around about 12 months from the point of us selling to all the work's been done.
Yields are real.
Yeah.
And that's what's landing in your bank account every month.
With me, I've got Mike Johns.
Hi.
Mike, you've been with us for how many years now?
Just over 10 years.
Yeah, part of the furniture.
Yeah.
And in the industry, even longer than that as well.
About 25 years. Yeah.
Yeah. So real experienced consultant, one of our senior consultants here at Residential Estates. Mike's picked out one of the properties, one of the developments that stands out to him over these last few years. So Mike, which was the one that you chosen to talk about?
I chose Chester Heights with it being local and being that particular model that we were so successful with.
Mm-hmm. We were so excited, weren't we, when we brought this one on. Like you say, with it being Chester, we know the buzz around it. We've got so much data to back it up because of the amount of properties we manage in the area. So this was a real exciting one, wasn't it?
Like two very, very impressive houses together. Two big old properties with loads of character.
Yeah.
On Whipcord Lane, very close to canals, where you've got a lot of, you've got Telford's Warehouse, you've got a lot going on there.
Yeah.
It's a very popular location for tourists, but also for businesses.
Yeah.
So it kind of ticked all boxes, really.
It did, and structure-wise of it, so there were 17 studios, I think, and one bedroom apartment weren't there. This was, as you say, it was already an up and running building, but it needed a lot of love, it's fair to say, didn't it? And that's where we sort of come in with the experienced developer that we work with.
They were cash only, but they were starting at 75k. 75 to I think 105, with the one bed being about 140.
Yeah.
So there were good prices for Chester, really good prices. There was a little bit of parking as well, which we can obviously always sort of rotate between customers. So having that parking in Chester is just amazing. You don't get many blocks with parking.
Yeah, that's it. And people, as I say, investors were kind of buying off plan on this one. So I think they put down, was it 80% of the purchase price when they legally exchanged and completed on the unit. Then once the work started, they paid an extra 10%.
Yeah.
And then they paid the final 10% once the developer we'd been working with had finished the works. From memory, that sort of whole period was around about 12 months from the point of us selling to all the work's been done, to it being up and ready, these particular units. Just talk us through, Mike, the actual studios themselves. How do they look? What was included inside them?
So we had the thing a lot of people don't get is that they think that they should be buying as much space as they can. But in this field, it's the beds really that make the money. And a small studio apartment that's 20 square meters with a double bed in there that splits into two singles, rents for the same as a 60 square meter apartment with the same bed in.
Yeah, you don't need that extra space, really, do you?
You just pay for it, but you don't get it back in your rent. You might get it back in your growth, but yields are real, and that's what's landing in your bank account every month. So they all had ensuite bathrooms, they all had kitchenettes in them. Some of them had little living spaces. I mean, we tried to utilize that space as much as we could. And really just a self-contained apartment that somebody could not live in, but could spend a good amount of time in there and not have to go out.
Yeah, exactly. And on this one, it did actually have residential planning. So you're right, the majority have been let out as short-term lets. There was actually one that there is a long-term tenant in there on it. And since the works got done, the rent went up by about £400 a month. So it just showed the value of that development works that went into the building, the refurb of it, and it worked on a longer term AST of it. But our main model, as you say, was more the short term lets, wasn't it, and the service accommodation side of it.
That's where we make our money. I was just speaking to a guy this morning who he was saying, you obviously get good commission on these. Well, we don't have to, because we're managing them as well. A lot of estate agents that you see online that are selling these big blocks in Manchester, they're getting like 10, 12% commission. And that's straight out of your pocket. We don't need to make that. So we can actually get some of the better properties and bring them to market, knowing that we're actually going to make once we start letting them out.
Yeah, that's it. And the type of people, then, if we fast forward to now, I mean, they've been up and running for what? Just over a year, I think now. It's been operational. The sort of guests that have been staying in there, mainly corporate?
Mainly corporate. I mean, we had a big corporate contract where we had a lot of them taken out at that point.
Yeah.
But we do get, I mean, sometimes when we're selling these types of places, you'll notice when we deal in Warrington, people are talking about Amazon. When we're talking about Halifax, we're talking about the Lloyds banking group.
Yeah.
And for Filton in Bristol, we're talking about the MOD. It's not just about that one.
No. Yeah.
You know, those companies all have a supply chain around them.
Yeah.
But also, you're dealing with not just one company, you're dealing with thousands of companies in each area.
That's it. You've got doctors, nurses, you've got lecturers, because the university was nearby, this one in Chester, wasn't it?
Yeah.
We've had a real mix, haven't we, of it?
We have.
And in terms of sort of yields that clients have been producing, you mentioned earlier on, they were like, prices were around the £75,000-£80,000 mark, weren't they, for the studio? What sort of net yields have they been sort of getting this last year?
Well, we've done some case studies, not just on the best apartments.
Yeah.
You don't do that, but generally speaking, 75 to 95k purchase price. People are getting a net return after all of the costs of around £900 a month. And that equates to around people are getting around 11 to 12%.
Yeah.
And that's good in the second year.
Yeah.
Because we all know that we have learning and efficiencies that tend to creep in. More people booking direct, more established relationships that will bring that yield up.
That's it. And then the type of investor, I mean, you sold a number of the properties in there. What were the sort of investors that bought it? What were the main reasons they were buying them for?
Again, massive. One thing that they all have in common is they all want to make money.
Yeah.
And they all want money in their pockets every month. They want to generate that income. Maybe either for now or to get used to getting that money coming in for a second income when they're in retirement. But we had some first-time investors in there.
Yeah.
We had one guy in there that owns about 13 to 15 properties from us.
Yeah.
So they all vary, but they all have that one thing in common, that they all want to make money.
Yeah. I remember there was one guy actually that bought in there, and he was buying it for his two sons, bought 2 studios in it, and both sons actually were at Chester University.
Right.
So they'd got a feel for the area. They're from Leicester, I think, originally, but got a feel for the area, recognised what the demand was like. And brilliant for those 2 sons. I mean, we educated them with it. We brought them into the office, and he was very much buying them for, he wanted his sons to feel it and know what property could bring them with it. And they've been sort of really hands-on, and I know it's been a good experience for them with it. So, yeah, a real mixture, isn't it, of sort of first-time investors to experienced investors on that one.
And it's a great model, because a lot of people, I mean, I speak to 20 to 30 people a day, and people say, well, I want to do a renovation project. And they want to do it themselves, but they're taking on all of that risk.
Yeah.
And you need so much capital behind you. As we know with this project, as soon as you start opening walls up, you're opening up problems.
Yeah.
So actually, for a developer to do that and to take a small profit from the whole thing and to turn sites like this constantly, and then to pass on to the investor and say, there's your investment. There's a warranty behind it as well. It's fully snagged. We're looking after it, so we're looking after that property all the time. They just take the headache away for you.
Yeah, 100%. And I think a lot of people as well are buying them for long-term income with it. Like you said, they're not really looking to do that flip with this sort of thing and get their hands dirty. It was a long-term thing. I'd love to be able to talk about what growth they've achieved, but no one's wanted to sell a unit in there, so we don't really have an idea of that. But that in itself is a good sign that there's no resales in there with it. People are very happy with what they're generating from it.
And we always say in Chester, you don't really get, because it's an affluent place, you don't really get a huge amount of growth. I think we've had some good growth in these, because actually a lot of the time with these short-term let properties, the growth is derived from the rent it generates. That's the commercial value.
Yeah.
So.
Yeah, no, 100%. But no, a real exciting project, and good to sort of show how, like you say, sometimes the smaller units, these studio apartments, can work really well. On both the buy-to-let side or the traditional service accommodation sites.
Yeah, the most successful investors that I've worked with, they're not just thinking about numbers, but they're thinking about what numbers they can generate quickly.
Yeah.
In order to generate more of an income, more cash, in order to reinvest.
Yeah.
You don't just have to use the traditional model of buy something, refinance it in order to reinvest. You can actually do that with your rental income as well.
Yeah, absolutely. And if anyone watching you would like to see these sort of numbers and see what sort of yields are producing, more than happy to show you those sort of figures well to give you a good feel. And we will continue to hunt for more properties in Chester because we know how popular it is, don't we, in the demand?
Absolutely. I think we've got one coming, maybe one coming up next year.
We do. Yeah. Exciting one on the future. Yeah. Brilliant. Cheers, Mike.
Thanks.